Hello, good day. Today is the 20th of April 2009, and here we are presenting to you the Forexserve weekly update. Last week we saw at the end of the week, finally, fear was getting the better of the feeling of comfort that the market was deriving over the last few weeks. It was primarily because of the statements made by the ECB, the Bank of England, and also the S&P. Despite the good results that one saw of the major US banks. Fear was taking center stage, and which has of course seen as we speak the euro coming down to 129 and the GBP to 145, which is basically the neckline of the formation that we have showed you later on in the chart. So what we see is another bout of fear, and that is what is shedding the values of the currencies that were bought over the last few weeks. Now the question is whether this trend continues or whether it reverses. Of course, we feel that the dollar is likely to weaken, and this is just some sort of a correction of the last few weeks of dollar weakness, and it would again re-emerge as we come closer to the end of the week. So by and large, I think the markets are getting used to the fact that riskier assets need to be bought, and that's how we've seen the Dow, S&P, and the Asian units all higher. And the gold, of course, is creeping lower as we speak, and the currencies like the Australian dollar and New Zealand dollar, which were the cynosure of all eyes at one point of time, again getting back into favor. The US interest rates, of course, we've seen are still languishing at the lower end of the trough, and I think it might continue like that for some more time. This week we see the major economic leaders meeting in Washington in a meeting with the IMF, and I think it will be a continuation from where they left off in London on the 2nd of April when they met again for discussing how they can get this world economic order back in step and running for that matter. So this week we will see a lot of data again from the US, Europe, and Great Britain, which would give further guide, and especially the corporate results of the US are keenly awaited. So by and large, it is going to be a risk-driven market this week, and we'll have to wait and see how it ends to take the call further for the next week. Thank you. This week we show you first the analysis of gold, which we have seen having failed at the neckline and has since been dropping, and I think that this trend could continue in the week. The target is somewhere close to 790, which is basically the projection of the depth of the head and shoulder pattern. Then we look at the chart of GBP, which is looking quite bearish as we speak. In fact, it has dropped since morning from 148 and down to 145.70, which is a very severe drop really. What we feel is that since it made a new high at 150 plus, it is a positive sign and indicates that there is potential for the highs again to be seen in the interim. But at this point of time, it is a kind of a return to neckline move, and the overbought condition that resulted from the effort of the last few weeks is being sort of resolved before the trend can again resume, maybe somewhere closer to the second part of the week. Then we also look at the chart of Australian dollar, which is also positive in the sense that it made a new high on a 3-monthly basis, which is positive for the unit. And I think here too we will see some kind of basing activity closer to the 70 region before new buying can again start, and market again looks at riskier assets which they have been shunning for some time now. Thank you and have a great week.